Welcome to Forex Mentor. Today we learn head and shoulder pattern. So now let's jump to the chart. So this is the head and shoulder chart pattern. So what is the head and shoulder chart pattern and important things to note about? The head and shoulder chart pattern is a bearish reversal pattern. When found in an uptrend, it signals the end of the uptrend. So eventually the market begins to slow down after going up for some time and forces demand and supply considered in balance. Seller come in at high to put the price down to test the trend line. So the buying pressure the buying pressures dries up and market test downsides to the neckline, which we say at a support or a neckline of a particular pattern. So how to trade head and shoulder chart pattern? So go short when price break below the neckline and retrace the particular trend line again. So set your stop loss the previous peak and set your target point to this level. This is the first way to set stop loss and profit taking. So you can use the distance in between the pips of a particular range. So if, for example, we say the range between neckline and the head is 100 pips. So after breakout, we set our take profit 100 pips, whether 100 pips here or here. Thank you. I think you learned something new about the Forex. I am Forex Mentor signing off.